Hi friends, I've officially secured over $1 million in trading profits during the last 2 months since the coronavirus stock market crash started. It took me 30 days of trading, no more than 1 hour a day, to earn over $1 million in profits, which averages to $33,000 per hour. Let me show you my trading results and share with you what I've learned over the last 2 months. I hope that you too can take an advantage of the information that I'm about to share with you. So, the big question, can you too make over $1 million in 2 months? Answer is absolutely yes, if you have the knowledge, experience and buying power that I have. But if you don't, then it is my job to teach you how to start small with no more than $500 and grow your account slowly to the point where you can make a living working from home. Below this video, you will find a registration link to sign up for TradeNet's intro package, where you will learn the foundations of day trading and go through the fundamental trading program that will make you eligible to apply to trade a $14,000 live funded account provided by an investment firm. Before we start, I would like to warn you that stock trading is a very challenging profession, and sadly, most of you will fail. But if you're motivated to learn and develop your self-discipline habits, you can prosper in this wonderful world of trading. If you have any questions or comments, please leave them right here in the comment section below. Also, don't forget to subscribe and turn the notification bell on to be notified by my future uploads and my daily live streams. I go live here on this channel every weekday, Monday through Friday at 9:15 a.m. Eastern Time. Now let's take a look at my trading results and learn a little bit more about how challenging the last 2 months has been and what you can take from home. Learn a little bit more about the way to trade in these very interesting times. I will log in now to my Colmex trading account. Click here to see my 2020 results. And here are my trading results since January this year. Well, today is April 14th, 2020, about a month and a half after the beginning of the coronavirus crash, and my profit, as you can see here, currently is $1,162,000. That's net after fees. But if you look to the left, you can see that my profit before fees is $1,192,000. You can see that in January I earned $36,839, which is above my normal monthly average of usually anywhere between $25,000 to $30,000. But also take a look at the surge that occurred in my account in February, March and mid-April. I want to point out that I trade every day live in my trading room with thousands of traders from all around the world. I call my picks before taking them myself, and I share my daily profit and loss every day in my trading room, Instagram and YouTube. So the data that you're seeing here is the data that I share in real time with transparency every day. If you like to look back at each of my trading days, you are very welcome to go to my YouTube trading channel and look into each and every trade I took in the past few months or few years. If you would like to join me and see me trading live every day, you are very welcome to click here and join me for a free 14-day trading room trial. You will also find there a link to join our free trading challenge, where you can get a free funded $14,000 account just by showing us that you have what it takes and make $500 in one trading week. That's all. You will also find there a link to download my free trading book. Now let's see what happened in one of my trading months, for example March. You can see here that my most profitable day, I was up $99,721. And in my worst day, I was down more than $19,000. I had 20 trading days from which I had 3 losing days only, which is probably better than my normal average losing days per month. What made these trading days better, easier and more profitable for trading? The answer of course is, as always, greed and fear, or in other words, market volatility. So let's take a look at the market's volatility. This is the S&P 500's ETF, SPY. And if you look back, you can see what would the normal day's volatility would look like. Somewhere around 0.8% range between the high and the low, maybe 1% on a good day. I mean, special days, of course, are more than that. But take a look at what happened on 24th February when the market started coming down. That's a huge volatility. Now I'm going to concentrate on these 10 trading days right over here. Now here's the SPY in 15-minute candles, and you can see how volatile it is. Now it's a bit hard to see the range, but if you take a look at the percentage movement between the highs and the lows, you can see that we have huge days like 8.6%, 7.8% and 5.6%. Now that's 10 times as much as normal volatility. But still, we do not trade the SPY because that's an ETF and you can trust the ETF less than you can trust individual stocks. We usually look for stocks which will outperform the market. For example, Beyond. Now take a look at Beyond. Take a look at how volatile Beyond is. 15%, 14%, 12% per day. Look at the market on the same days. Half as much as Beyond moved. So when you look for something to trade, especially during the market crash, you do not trade the S&P 500 or any other ETF. You look for a stock which will usually be much more volatile than the market and therefore gives you many more opportunities. Now let's take a look at just one day here in Beyond. I'll choose this day right over here where Beyond moved higher. Now here's Beyond in 5-minute candles. If you take a look at 5-minute candles, you can see that there are plenty of trading opportunities here. And again, the volatility is huge. The range is very high, but also the risk. And that's what I was trying to talk to you about, the risk while you trade the market the way it is, and possibly some rules that can help you trade during these volatile times. So if we have an entry over here, 52.85, let's take a look at the stop. It's almost 3 points down. Usually when I would trade Beyond, I would look for a 50 cent, maybe 1 point down stop loss, not when the market coming down or then pulling back up like this particular day here. And your target could be here, possibly 55.85, and again, that's approximately 3 points up. And you can, of course, look for more. Now, what's special about the market during these times or an individual stock? The market can be more trusted. I mean, the trend can be trusted. Therefore, the trend of the individual stocks that you're trading can be trusted as well. Therefore, the risk-reward rules should change. Normally, my risk-reward rules would look something like this. I would usually risk anywhere between 1 to 2% of my account balance per trade. Now, that changes in between trades that you think that are more likely to succeed. You could risk more, take them up to 2%, and your regular trade should be around 1% of your account balance. Or in fact, how much money you are willing to lose, not necessarily your account balance. For example, if you can lose up to $10,000, you may risk around $100 per trade. But in times like this, risk management rules are changing. For example, you should consider changing your risk-reward ratio per trade. Now, not all trades are created equally. That is true for normal times, but during crash times like we have right now, per trade, depending on market direction, depending on how strong the market's coming down or then pulling back up, you need to change your risk reward and to adapt it per trade. Is that easy? No. If you're a novice trader, that's almost impossible. You can't possibly do that. You need to be experienced in order to know how to change it. That's why usually during times like this, if you're just a novice trader, I would suggest just sit on sideways, just don't participate. Trade demo or lower your size. But if you're experienced enough, you need to use more buying power and in fact change your risk reward per trade. And here's the point about the buying power. Use more buying power for special trades. Now, what's a special trade? Well, if you play blackjack and you get 11 and your dealer gets something else, for example, 10, then you probably have an advantage. Then you double down. If you trade, you double down on trades when you feel like you have a special trade, especially during these times when the market's crashing or moving up as we're seeing the last few weeks, the big pullback from the lows. So the market is more volatile. You can look for more special situations, special looking technical formations, use them and use much more buying power than you use usually. So the thing is, when the market is crashing or pulling back up, there's more opportunities like this and you should risk more, change your risk reward, your usual risk reward ratio, and adapt it to the situation. For example, if your risk reward ratio is just 1 to 2, you can definitely try and look for bigger moves like 1 to 4. I usually use 1 to 1 risk reward ratio, and I find myself now using 1 to 2, even more than that. So everything here is very, very important to be adapted to what the market, to the way the market behaves. Now, the last rule is follow and trust the market trade, especially when the market is moving down. In times like this, fear and greed rule the market. With the market coming down the way it did, you can trust the market trend to continue more than usual. And again, don't trade the S&P 500, although you can possibly trust it more. Trend a stock like Beyond or Boeing or Tesla or whatever, because you can trust them more than you can trust the market's direction. Now, that's especially true when the market's coming down. When the market's moving up, I usually lower my size. I do not trust it as much as I trust it as if the market was coming down. When the market's coming down, your chance to succeed is better. Again, change your risk reward, use more buying power. Now, again, that's true, especially if you're an experienced trader. And if you're not, just experience this amazing market, because you will learn something by trading small size or trading demo. I mean, you don't have to make a lot of money during this crisis if you're not experienced enough. When I started trading, the year was 2000, and that was a beautiful, amazing market for people who were experienced. I lost money during this period because I was not experienced enough to enjoy the market as it came down. But I did take advantage in 2008, and of course during this crisis right now. So again, you need to learn, you need to experience the market. It's an amazing time to experience the market. And if you'd like to join us, just click here on the top corner and join us for a free 14-day trial in our trading room, or join any of our programs. We would love to trade with you. Thank you very much for watching this, and I'm looking forward to seeing you in my trading room. Thank you for watching our video. Before you go, we invite you to take TradeNet's free welcome course. It was designed to teach you the basics of Wall Street trading. Click here to sign up for this no-risk, no-cost offer. If you like this video, please subscribe to our YouTube channel, where you can view many more stock trading videos. Questions or comments, please submit them below.